Hi team. In the lessons that follow, we're going to learn about the individuals and teams engaged in this rigorous exercise of sourcing, pricing, and structuring transactions. We will be talking about icons like Bradley Jacobs, the one-man private equity roll-up magician, and also Ryan Reynolds, who you probably recognize from The Green Lantern, and who, in addition to saving fictional movie worlds, also has a very interesting take on private equity. Now, to make the content easier to absorb, we will approach private equity by first introducing the independent sponsor, and then following up with an introduction to the private equity fund. By starting with an independent sponsor, the focus is narrowed to how one individual buys one company, which will make it easier to grasp the concepts involved. Then, with this framework in mind, we can add detail to explain how a team, backed by a fund, builds a portfolio of companies. So let's start with a little background on the independent sponsor. Superficially, an independent sponsor is an individual that acquires a company and raises funds on a deal-by-deal basis without raising a committed pool of capital. A book titled Investing in Private Companies, a financing manual for the entrepreneurial investor that was published in 1984, opens with the following. The unsung heroes of our American form of capitalism are the private individuals who provide financing for the more than 11,000 companies formed every week in the United States. These informal investors, aptly known in the business world as angels, venture where bankers fear to tread. Per the book, in the early 80s, it was unlikely that an entrepreneur would secure outside funds. And if they did, the funds were most likely sourced from an inexperienced investor. Fast forward to today, and a healthy founder-entrepreneur-run business is the diamond-in-the-rough investment sought by many venture capital and private equity firms. Perhaps more surprising is how the formerly inexperienced investor has become a well-established and accepted player in the private equity industry. So much so that funds have been raised solely to support independent sponsors looking to secure funding. And this is wild to me because when I started working in private equity in the mid-2000s, the term independent sponsor or fundless sponsor nearly carried a derogatory connotation. Like you really didn't want to be known as an independent sponsor or a fundless sponsor. But then growing competition across the private equity industry made deal sourcing a priority. And this dynamic increasingly gave individuals talented at finding opportunities for investment the confidence to go out on their own. In the current market, independent sponsors with the right reputation can operate at nearly any scale. In this capacity, Bradley Jacobs is incredibly impressive. Now, first of all, this guy is so cool that he has a single-page website. Pretty strong flex. And on it, you'll see that Bradley S. Jacobs is Managing Director of Jacobs Private Equity, LLC, and Chairman and Chief Executive Officer of XPO Logistics. Now, I'd recommend reading everything on this page, but for the purpose of this video, I just want to highlight this paragraph here. Over the course of his career, Jacobs has led teams that integrated approximately 500 acquisitions and opened over 250 greenfield locations, raised over $25 billion of debt and equity capital, including 2 IPOs, and created icons of business excellence across several industries. This is clearly an extreme example, but I think it's important to be aware of what an individual with the right skill set and network can do in this space without a pool of committed capital. On the subject of having the right network and a megaphone to make announcements, Ryan Reynolds is another example of a private equity investor that does not operate from a fund. This talented human takes the money he makes from being awesome in movies like Deadpool and invests it himself in opportunities he identifies because his social media megaphone gives him a massive advantage over other investors. For example, when he invested in Aviation Gin, sales reportedly doubled from $20 million to $40 million. And Jefferies estimated that the company sold 96,000 cases in 2019. Then, in 2020, Diageo agreed to buy Davos Brands LLC, a portfolio of brands including Aviation Gin, for $610 million. So why is this important? Increasingly in private equity, you need more than access to capital to outperform your peers. We have talked about how debt can enhance returns. But if the entire industry has access to debt, how do you do better? Bradley Jacobs is insanely talented at mergers and acquisitions, and his team can execute roll-up strategies on an incredible scale. Ryan Reynolds uses his celebrity and a marketing company he launched to market Deadpool. He named the marketing company Maximum Effort Productions, which is such a fantastic name. And the venture was formalized in 2018 when Deadpool 2 raked in $785 million at the box office. He has since used maximum effort every time he makes an investment, which to date include both Aviation Gin and Mint Mobile. As one last example, Vista Equity Partners, which was founded by billionaire investor Robert Smith, turned software companies into profit machines, per an article in the Wall Street Journal. His private equity firm has codified that notion into 110 acronym-heavy directives known as Vista Best Practices. They are secret, stored on a company server that makes a record every time anyone downloads or prints them. The fund manages $30 billion plus, and Smith has a net worth in excess of $4 billion, so it's been working pretty well for him. But the point is, whether it's a skill for M&A and roll-up strategies, incredible marketing, or a secret playbook for value creation, it will be increasingly important to find advantages beyond capital structure in private equity. If you're thinking about working in private equity or becoming an independent sponsor, ask yourself what advantage the firm you're contemplating working for has over the competition, or what advantage you have as an independent sponsor. This is also really important to think about if you're contemplating investing in a private equity fund. Coming full circle, the reason an introduction to the independent sponsor is helpful to understanding private equity is that the focus is on a single transaction. In the lesson that follows, we will explore how this structure comes together. The process required to arrive at this structure, which is specific to the independent sponsor model, is similar to the process required to close each transaction at a private equity fund. In this image, each of the small Portfolio Co. boxes at the bottom of the image are the equivalent of the one red-lettered gray box titled Acquisition, visible in the independent sponsor structure. A strong understanding of both frameworks will make the content that follows much easier to digest. In the videos that follow, both of these structures will be dismantled and explained one component at a time. And by the conclusion of this course, you should have a greater understanding of how these two private equity participants operate. The additional advantage of this approach is that it should help those interested in pursuing a career as an independent sponsor or private equity professional focus on the contents of the curriculum most relevant to them. All right, team, that's all for now. Thanks for watching.